Good evening, people. So we'll get started with chapter number 2, that is tangible non-current assets. Okay, this covers various sub-concepts. So today our whole discussions will be related to IAS 16, that is property, plant and equipment. I think we did spend a little time on property, plant and equipment. Earlier we used to call this property, plant and equipment as fixed assets. Now we don't use the term fixed asset anymore. We call it as property, plant and equipment. Okay, as I've told you, we don't have fancy theory books. Everything will be covering in the form of the chart book itself. So let's get started with our first concept. Or before I start with the concepts, can you help me understand what is a property, plant and equipment, or fixed asset that we used to previously call? What according to you is a property, plant and equipment? Anyone can speak up, that's fine. Even online people can just respond. What according to you? Or okay, is cash a fixed asset? Is cash a property, plant and equipment? Yes or no? Online also keep responding. As I've told you, if there's any issues, I'll get to know, please. Okay, so cash is not a fixed asset. Okay, how about debtors? Is debtors or a trade receivable a property, plant and equipment? No. Sure. Okay, how about building? Building, is it? Yes or? Okay, how about machinery? Is machinery a property, plant and equipment? Yes. So that means on what basis are you decoding some components to be property, plant and equipment? Some are not property, plant and equipment. Is there any parameters or indicators using which you're decoding that, or just like that you're saying? Is there any basis? On what basis did you say plant and machinery is and cash is not? Somebody is saying which is less liquid and used for a longer period of time is a property, plant and equipment. An asset which is less liquid. Liquid assets means easily you can sell them or realize them, and that should come for a longer period of time is a property, plant and equipment. Anybody else has another answer? And there's no right or wrong answer here. We're just discussing. We'll see the right or wrong answers later on. Anything to add upon, or that's about it?
More than 5 years, if asset is there, then it will be
An asset which lasts for more than 5 years or 1 year. Did they say 5 or did they say 1? I remember my teachers telling 1. I don't know what your teachers told. Okay, if you're saying 5 years, I'll take it. So she's saying an asset which lasts for more than 5 years is a property, plant and equipment. Something less than 5, not a property, plant and equipment. Okay, that is one answer. Anything else? Okay, just to argue with that point. All right, is it okay? We can just have a little bit of conversation around this. Just deliberations. I have 500 rupees ka Gandhi note. 500 rupees, Indian rupees I have. I kept it in my wallet. 5 years I'll not even touch. Sentiments. Okay, my mom gave me, my girlfriend gave me, whoever gave me. Okay, too much sentiment. I'll keep it in my wallet. I will not touch it for 5 years. Okay, is that cash a property, plant and equipment? No. Somebody said it should last for a longer period of time. Someone told 5 years. Somebody is saying longer period of time. So I'll keep that for, okay, even to make it even more interesting, I'll keep it for 7 years. I've taken Shapata oath. 7 years I will not touch it. Is cash a property, plant and equipment? No. 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 Then any other reasons are there that you can think of? Sir, we paid the fees, sir. You should speak. Why should we speak? Sorry? No, sir. If we say anything again, you'll start with another 101 things only. Better not speak only. Yeah. I'll do a thing. I'll not tell you the characteristics now. I'll give you some examples. Let's understand that example, and then we will go back to definition and see what is property, plant and equipment. All right. ACCA folks, right? Let's assume for a minute that you guys have cleared ACCA exams. Okay, hip hip hooray, full pakka. Okay, you got a rank also. You took coaching from me, still you got a rank. It's a miracle, but it happened. Okay, you passed ACCA examination, and let's say you joined a company known as Wipro. Okay, Wipro told you, they made an offer. You liked how much they offered. Let's say they offered about 15 lakh rupees per annum. You liked the offer, so you accepted it. So today is your joining date. So you took your bike and went to Wipro ka campus, Bangalore campus. I'll give you various examples. All you need to tell me is whether this particular component that I'm listing out is a property, plant and equipment or not. What comes to your mind, you tell. We'll do the deliberations or we'll discuss on that later on. Okay, first, sir, you went to Wipro. This is a practical example which you will see on a day-to-day life that I'm giving you. So you went to Wipro campus. That's a 10-storied building in Bengaluru. Okay. So you went in bike, you parked your bike in basement. You parked your bike in basement. In basement of Wipro, you are able to see an ambulance. Wipro has purchased an ambulance so that if any employees get sick, okay, so we can kind of use this ambulance and send them to the hospital soon. Later on, you got to know that Wipro Limited spent $100,000 for this ambulance. Or maybe I'll write the amount here. They spent $100,000 for this ambulance. Is this ambulance a property, plant and equipment for Wipro? You just need to tell whether yes or no. They purchased this ambulance so that we can use it in case of a need. Is this ambulance a property, plant and equipment? Online also, please respond. Okay, somebody saying yes. How about offline? No ideas. First only bounced. Okay, no worries. Okay, there's a relevant example. So, all right, so you are in the basement now. I'm just writing the popular answer, whatever I'm getting. This is not the right or wrong answer. We'll see that right or wrong little later. Okay, next to the ambulance, you see a lift. Since it's a 10-storied building, the buildings, such tall buildings generally have a lift. Let's say this Wipro Limited has constructed a lift and they've spent about $500,000 for this lift. Is this lift a property, plant and equipment for Wipro? Patapat, you should tell. Whatever comes to your mind. Yes or no, that's all I'm asking. Not reasons. Just yes or no. Yes. Popular answer online also yes sir. Okay. So you took that lift. You came to the receptionist area. The first floor. In the receptionist area, there is a furniture. The fancy companies have fancy furniture. This Wipro has spent about $50,000 for the furniture. Or to make it a little more interesting, let's say they've spent about $100,000 for a furniture. Nice posh furniture they have spent so that people can aramse chill out. Is this furniture a PPE? PPE as in fixed asset, okay? Yeah, you just need to tell me yes or no. Why yes or no? Yes sir. Okay. Alright sir. You're sitting in the basement area or in the receptionist area. Your manager came to you the first day. He took you to your workstation. Let's say that is in the 4th floor. In that 4th floor, Wipro has installed, or in all the building, no? In the entire floor, Wipro has installed centralized air conditioning system by spending about, let's say, $300,000. Is this centralized AC a property, plant and equipment for Wipro? Yes, sir. Sir, how what and all you'll give? Wait, make it a little interesting. Okay, sir. So manager told first day, we're happy with your performance. Moreover, you are ACCA global rank holder. Let's meet Wipro ka finance director. Let's go and meet him. You went to his finance director ka cabin. In his cabin, no, there is a painting installed. In his cabin, in that MD ka cabin, there is a painting. And you got to know later that Wipro has spent $50,000 for this painting. Is this painting a property, plant and equipment for Wipro? Everything bouncer, sir. No, yes, sir. What? Okay, somebody is saying no, so I'll just take it as no. I was not looking at right or wrong answer. The intention of me giving you these are, actually, do you see all this in a company, sir? Do you see all this in a company? Yes. But are you easily able to decode that this is a property, plant and equipment or not? By split second, are you able to decode them, or there is a little confusion? There's a little confusion. Or some asset you're comfortable, maybe furniture, AC, this and all you're comfortable. Yes. But this painting, ambulance and all, heart is saying one thing, mind is saying something else. There is a little bit of confusion. Yes or no? To answer these sort of question, we have IAS 16, property, plant and equipment. Got the necessary why this particular standard was formed? Okay, standard gives you only 4 components. As I told you yesterday in yesterday's session, every standard, right? Standard just targets 4 aspects. What is the aspect I had told you previously? Anyone remembers? Every standard covers only 4 things. One is recognition. Second one, measurement. Third one, presentation. Fourth one, disclosure. Only 4 aspects all the standards will cover. There are 30 plus standards that you have. Each standard ka aspect is only this, to recognize. Like if you're talking about IAS 16, IAS 16 simply says whether a particular asset is a property, plant and equipment or not. A component, an asset should be recognized as PP or should it not be recognized as PP. That is first area it targets. Okay. If at all you decide, yes, it is a property, plant and equipment, and the next question will be, how much should I show that PP in my books? At what value should that asset be shown? That is your measurement aspect. Comfortable? Third aspect is presentation. Where should I show that property, plant and equipment? Should it come in P&L? Should it come in balance sheet? If at all you say balance sheet, where it should come? Should it come under current assets or should it come under non-current assets? This is your presentation aspect. Last aspect is disclosures. Should you give any additional information relating to any property, plant and equipment? That's all the standards essentially covers. Comfortable with this? Okay. So basically IAS 16 was necessary because there are a few assets where you can't really decode them to be a property, plant and equipment or not. You would need some extra guidance. That is the reason this. Okay. So far okay? The pace is okay all right again? Now what we will do is, I'll tell you the definition of PP. I'll not tell you the answer for this right away. I'll tell you what the standard will not go like this. They will not list, because is it necessary? So for example's sake, I have listed 5 assets. Will there be only 5 assets practically, or there could be hundreds of assets? There could be many of them. Yes. So standard will not dive into each asset and say this is PP, this is not PP. Like that they won't say. They will form some definition. Whichever assets fits into that definition becomes property, plant and equipment. Whichever does not satisfy, it is not a PP, like that. So this particular standard has given a definition. Can we look at that definition? Okay, I'll just put it up over here. Just listen to me. That's okay. First, if you want to no need to look at the screen. Just listen to what I'm saying. If you want to call an asset as property, plant and equipment, it has to satisfy 3 features. Something which satisfies 3 features becomes property, plant and equipment. First, it should be a tangible item, meaning it should be a tangible asset. Tangible means what? Something which you can see, touch, feel. Only those assets which you can touch, see and feel, they only can be called as property, plant and equipment. That is the first definition. This and all you're expected to remember, okay? Because whenever there is a confusion, you have to always, definition of PP is very important because it answers a lot of questions. You need to remember, that's the reason I've just put it in a fancy, nice, colorful way so that you can revise in the last day. But forget about the book now, just listen to me. First is what? It should be a tangible item. Okay. Second one, it should be held for use. Meaning that company should be using that property, plant and equipment. For what purpose? Any of the 4 purposes they must be utilized. They can use it for any of the 4 purposes. One is production of goods. They can use that property, plant and equipment either to produce some goods or to render or to give some service or for administrative purpose or for rental purpose. That property, plant and equipment should be utilized. Repeat with me because this is something which you need to remember any which way so that everything you can learn it. If something needs to be memorized, as I told you yesterday, we'll do that in the class itself. Going home, you should only be able to revise. And according to me, this is a thumb rule that I follow for all my subjects. I handle 7+ subjects across different domains. This is a simple thumb rule that I follow personally. A student should just go home and only revise. And that revision should not take more than 30 to 40 minutes. Anything, be whether a theory paper, practical paper, that's how I cover it. So everything should be done in the class. All right. So we'll do whatever is necessary to make sure that we will learn all the things in the class itself. So second purpose, what did I say? It should be utilized. That property, plant and equipment should be utilized. For what purpose? Either to produce goods or to render a service or for administrative purpose or rental purpose. purpose. One of these purpose, it's okay. That is the second characteristics. Third characteristics, as somebody already pointed out, you said 5 years, right? It's not actually 5, it is 1 year. That property, plant and equipment or that particular asset should be held for more than one accounting period, meaning it should be held for more than 12 months or 1 year. PPE means that asset should last in your business for more than 1 year. That's one. These are the three. If any asset which satisfies these three characteristics, all the three things I've written here and everywhere, if you just check, okay, those assets which satisfy all these three characteristics automatically becomes property, plant and equipment. Are we okay so far? Tangible item, it should be held for use. The usage is production of goods, rendering service, administrative purpose or rental purpose, and that usage should be for more than one accounting period, meaning it should be for more than 1 year. Comfortable? Now we'll go one by one. I think first one is okay, right? Tangible item, meaning it should be you're able to touch, see and feel. It should be held for use. Can we spend a minute on this? First, that PPE should be used in the production of goods. Like, let's say there is a company known as Reliance. Okay, they have a factory building. Okay, from that factory, what will they, why is that factory building utilized? To produce some goods, yes or no? Let's say, like, we have some Reliance, what is that? Now Reliance is Jio, they're manufacturing phone also. To manufacture phone, obviously they won't do it on the road, no. They'll obviously do it in one premises or in one building. Yes. So Reliance is using that building for what purpose? To produce one phone. That is your production of goods. So that PP should be utilized to produce a goods. Whatever the goods is for you, you should be able to use it. Either that or supply of service. Now think about us, a review pro. Are we selling you any product? Are we saying, hey, take this mouse, take this camera, take this, take that? No. What are we giving you guys? A service. Yes or no? Now, do I need any asset to give my service? You are able to see 101 assets here only inside the classroom. We have television, a big television. We have iPads, we have camera, we have laptop, we have this mic, we have AC. Am I selling you all this? No. Am I selling you any goods? No. I'm giving you what? A service. By utilizing all this only, I'm giving you a service, right? So that is the second feature. That property, plant and equipment should be utilized for providing or for supply of a service. Second feature, is it okay, everyone? Can we dive into the third one? Third is administrative purpose. This is the most important purpose that they brought into the definition. If this word was not inserted, 90% of the property, plant and equipment will not come in balance sheet. You would not be in a position to recognize. Just to give you an example, let me give you our own academic example. In the classroom, are you able to see AC? Yes, you are able to see the AC. That means, is that AC necessary for me to conduct the class? Especially summertime. Imagine a place like Chennai. Suppose our coaching is not in Chennai, but just for a sake, if you just go back, if you assume our coaching center is in Chennai, summertime, if you're conducting class, that to afternoon time, we are conducting a class. Would you feel, do you think AC becomes a necessary there? Yes. So I've installed AC in my classroom that I'm utilizing to giving a service. Suppose the same AC, if I install in receptionist area, same air conditioner, if I install in a receptionist area, is it a property, plant and equipment? Am I conducting any class in receptionist area? No. Right? That means it is not utilized to give any service. Correct? That means automatically it will not become property, plant and equipment. But you think, can you run a coaching center, coaching business just with faculties? Just with faculties and teachers can you run, or you need some administrative people for help also? We need to print books. If you have some of us are taking recorded classes. If you have any issues, you need to have a technical team to sort it out. Correct? If you need any help with examination registration, you need help. Right? Faculty only teaches and he goes off. Correct? After that, you'll not be able to see me. If you have any other small issues like all this, books and all this stuff, you need to check with the academy itself. That means we need to have some persons. Correct? So that means even administrative purpose, if you are using any assets, they are also property, plant and equipment. Got it? So even if I install an AC in my receptionist area or any other area, still it will be considered as an administrative asset and it will be taken as property, plant and equipment. Are we comfortable? Majority of the PP will come under the administrative purpose. Any confusions? No? Alright, what is the last one? It should be held for rental purpose. If you remember your parents or your grandparents, what is their favorite investment? What is the favorite thing they used to buy? One is gold, leave that. Other than that, land. Yes, majority of them either will buy gold, silver, or their next best asset is land. If you ask them why you already have 4 or 5 land, still why are you buying? They will say, hey, you don't know. Later on it will appreciate and you will get money. Yes or no? They have lot of building, but still they will buy more buildings. With what intention? With an intention that later on that building ka price may increase and we make money. Meaning for capital appreciation purpose. That is one. Or for rental purpose. Yes, some of them invest in land just to get rentals. We have seen this. So if you have bought any land or building with an intention to earn some rental income out of it, or for capital appreciation purpose, even that will become property, plant and equipment. So this is your second feature. If you need a minute, if you want me to wait, you can let me know. I'll wait. Or if I'm not getting any response, I'll think that you guys have got it and I'll move on. That be okay? Can I go for the third one? We have seen 2 features now, even online also. Alright, we have seen 2 features. What is the third one? That property, plant and equipment should be used for more than 1 year. Now I think you are fancy. If somebody asks you what is property, plant and equipment, I think you will be able to spell it out much better. Yes, these characteristics, good enough? 100% understood. Online also, all this definition. 100% you guys got it? Padapat, give me your response. Yes. Okay, here also okay? Alright, let's see how well you have understood. Or maybe let's decode this example first and then we will see. I'm giving you a correct answer here. Now you tell me, sir, is ambulance a property, plant and equipment? Will ambulance give any revenue for Wipro? No, but it becomes what asset? Administrative asset. Correct? See, if you want to join a company, if company says, don't worry, we have ambulance, we have wellness room, okay? So if something happens to you also, we'll make sure that you get the right kind of medical facility. Would you feel comfortable working in such organization? Yes. That means all this also will become what? Administrative asset. So is this a property, plant and equipment? Yes. How about lift? Obviously, it's a 10-storied building. If you don't have lift, no, people will quit. For 2-3 days, maybe they'll say, they'll give gyan and start taking stairs. 4th day, they will say, to hell with your company. They'll quit, don't go on it. Yes. So is this lift a property, plant and equipment? Yes. Furniture, I think these there are no doubts. Yes. Centralized AC? Yes. Painting also? Yes. These are aesthetic assets. If you remember any company, right, they will have some aesthetics. Okay. So these are also necessary. See, office means you just can't keep it. Like here also, no, we have also, you must have done, we could have done some decorations and all that. They are not necessary. Even the chairs also for that matter are not really necessary. I can say, we'll follow a Gurukul system. Sit on the floor. That is also okay. Comfortable only. But you will say what? 1 or 2 days you will feel, hey, super experience macha. 3rd day you will say, Dabba Academy. They take so much money, one chair also they cannot give. Correct or no? So some aesthetics like painting and these sort of things also are necessary for decorative purposes. They also will fall under administrative purpose only. So they also will become property, plant and equipment. Any confusions in any of the examples and solutions that we have given there? None? 100%? Okay. So if there's no confusion, let me see how well you have got it. I'll give you one more example. This time, using definition or thinking about definition, you need to tell me whether that asset is a property, plant and equipment or not. Will you do that? Okay. IPL season. Yes, majority of them follow. Kohli, King Kohli, Virat Kohli. Yeah. Let's say BCCI, you know. BCCI, they pay 5 crore rupees annually to Kohli. BCCI, Board of Cricketing body in India, they pay about 5 crore rupees to Kohli per annum. Let's say there is a contract for 3 years that BCCI has entered with Kohli that you need to play for our country. Okay, and I will give you 5 crore rupees per annum. Done. Now BCCI wants to show Kohli as a property, plant and equipment in their books. BCCI wants to show Virat Kohli as a property, plant and equipment in their balance sheet. Can they do so? Yes or a no? Just don't say simply yes or no. Go back to the definition, revisit that definition in your mind and then decode. Online also tell. Think over and let me know what is the answer. Related example only, happening only, any which way. So can you tell me? See, all this I can cut off. I can simply tell you what is required for examination and move on also. But, will the knowledge increase? You'll just mug a few things. That's all. It's good for me also. Because less number of hours. Even I need to shout less. Okay, but I feel standards, many standards are approached. They're created logically. Okay, so if there is a logic, we should know it. We should learn to question it, and that's where we will learn. That's the reason I like to teach like this. This will take little extra time. But it will stay, all these concepts will stay in your mind for a longer duration. Is this approach okay for everybody? If you just want core examination, I can cut off all these examples. Straight away, I can dive into the questions, do what is required and move on. That approach is also okay for me. Or this approach also is okay. What do you feel? Would like to learn it this way? Would that be okay with online as well? Yeah? Alright, then I think you should be more responsive. Because that's when it is fun. Because if you don't respond, I'll feel like, hey, why to give so many examples? Let's cut it off. I'll also not get that josh. Just I need an answer like yes or no, yes or no. So that's all. She's saying yes, you can add. Nitin is asking, how can a person be a property, sir? And then he only answered, yes, sir. He's been used for more than 12 months, so he is a property, plant and equipment. He only questioned, he only answered. That's nice. That's self-help is the best help. Okay, what about others? Yeah, everybody is saying yes, sir. So let's do one thing. Let's go back to the definition. What is the definition? One is tangible item. Tangible item means you should be able to see, touch and feel. If somebody wants, can they see Kohli? Can they touch Kohli? Yeah, if it is permission, of course. Yeah, can you see Kohli? Yes. So is he a tangible item? Yes. Held for use. For BCCI is using Kohli for what purpose? For cricketing service. Yes. Is he being held for use? Yes. Because he is used for supply of a service. Cricket or sports is a kind of a service which we are providing to the nation. Yes. So he is being held for supply of service. Used for more than 12 months. I only told, let's assume that the contract is more than 3 years. So looks like all the definition is getting satisfied. That means what is the answer? Yes, Virat Kohli is an asset. On the similar lines, can Tata Limited show Ratan Tata as a property, plant and equipment in their books? For BCCI, Kohli may be their biggest asset. For Tata Limited, Ratan Tata is their biggest asset. Then Ratan Tata, the Tata company is saying, I want to show Ratan Tata as a property, plant and equipment in my books for 500 crores. 1000 crores. Microsoft is saying, Bill Gates, 2500 crores. Can they do it? Mark Zuckerberg also got excited. He's saying, my worth is $10 billion. Facebook is want to show him at $10 billion. Can they show? No. Though it looks like human beings are satisfied. Kohli is a human being, right? Yeah, I'm not talking from the nature perspective and all. Okay, overall, human beings cannot be considered as a property, plant and equipment. The answer is no. Human beings can never be accounted or should not be accounted as property, plant and equipment. Though it looks like it is getting satisfying the definition, no? First feature of the definition is getting failed over here. It's a tangible item here, no? Actually, it is tangible asset. Our books uses the term items, but in reality, it should be a tangible asset. Now, you should go back to asset ka definition. There's an asset ka definition. Have you learnt it in your F3 somewhere? No. Asset means something which should be within our control, from which we will get all the benefits and restrict others from getting the benefits. This is the definition of an asset. If you want to call something as an asset, that particular component should be within your control. And from that particular asset or from that component, no, you should get all the benefits and you should restrict others from getting the benefits. Just to give you a smaller example or to decode this. What's your name? Oh my god, that is different. Alekia. Okay, I'll call it as A. Yeah, easy purpose. That's okay with you? Okay. Let's say Miss A has 2000 rupees Gandhi note with her. I don't know whether she really has or not. Let's assume that she has 2000 rupees Gandhi note with her. Is that a cash she has it? Is it an asset for her? She has 2000 rupees cash with her. Is that an asset for her? Yes. How is it an asset? Because she can utilize that. She can use that 2000 rupees to buy whatever she wants with it. If she wants, she can give it to me. I can take it playfully. Yes. Or she can tear it off if she's crazy. Yes, she can, if you want, she can do anything with it. Yes or no? And can she prevent me from taking that? Yes. That means that particular component is within her control. So that is what is the definition of an asset. Something which is within your control, from which you will get all the benefits and restrict others from getting the benefits. Comfortable? Now, is Kohli an asset for BCCI? Does BCCI have control over Kohli? Tomorrow can BCCI tell, hey Macha, you become wicket keeper. You're speaking too much. Wicket keepers generally have to speak more. You become wicket keeper or you become left-handed bowler. Quit batting. You have seen enough of your batting. Quit batting and become left-handed spinner. Can BCCI tell like that? No. And if Kohli wants, can he take the retirement tomorrow? If he says, I don't want to, he quit captaincy just like that. Yes. That means you tell me honestly, does BCCI really have a control over Kohli? Since there is a, what fails in human beings is a control. You will not have control over human beings. Hence, human beings are not shown as an asset in the balance sheet. That is the reason human beings are not assets. Got the answer, huh? Comfortable? Any doubts? Anyone? No confusion? Can I move forward? Okay. So we saw the definition that you're comfortable, right? So what is, this is a definition of what? This is a definition of property, plant and equipment. Now, if you, this is the definition of PP. But if you want to show PP, where will PPE come in? Balance sheet or P&L? Where will fixed assets be shown in? Balance sheet or P&L? Balance sheet. If you want to show this property, plant and equipment in balance sheet, no, there are two recognition criteria. Totally 5 parameters should be satisfied. 3 we have already seen. There are 2 recognition criteria for PP. One is FEB, another one is cost measurement. If you want to show PP in balance sheet, no, because of that PP, some benefits should come to the entity. Because of that asset, some benefits should come to the entity. It's not necessary you should get the benefit today only. Even if you feel you'll get that benefit after 1 year or 2 years or 3 years, it is fine. If you feel some benefits is going to flow to the entity, then it is fine. That only for our class purpose, we'll call it as FEB. FEB as in future economic benefits. Who should get this FEB? Entity, the company. Because of this PP, some benefit should come to the entity. Second one is how much you spent for that fixed asset. No, you should be able to measure it clearly. Like if I want to buy this camera, let's say camera cost 30,000. That means, am I able to measure this cost reliably? Yes, because I paid how much for this camera? 30,000. So how much you spent for that fixed asset to acquire it, you should be able to measure it clearly. That's all it is. If these characteristics are satisfied, then you can show PP in balance sheet. 3 definition ka criteria and 2 recognition criteria ka criteria. That's done. Okay, this is the first leg of our topic. If you need a minute, I shall give you, else I'll move on. Like this, we have around maybe 10 to 12 concepts. If I have to tell in numbers, 2 are over, no? Another 10, maybe another 7, 8 more are pending. Once we are done that, I mean, once we do this and we have some questions also, this particular standard will be covered. That's what we'll be covering. We learn a concept, then we will apply it in a couple of questions to understand the concept better. That's our approach for all the standards is going to be. Okay, can I move forward, people? Sure. All right. So this is done. 1 minute. I'll just check if I can take up any question. Not yet. Okay. All right. So let's move on to the another concepts. Third concept. Initial recognition of PP. I told every standard covers only 4 aspects. What is the first aspect, sir? Recognition, right? So in the first 2 areas, we decided when can you recognize a property, plant and equipment, right? What is the second aspect every standard will talk about? Measurement. That is what you are coming now. The measurement aspect. Okay. All right. Initially, if you buy any fixed asset or any property, plant and equipment, no, they'll be measured at cost. Like I purchased this camera by paying 50,000 rupees. To conduct a class, I purchased this camera by paying 50,000 rupees. So that means initially I will show this camera in my books at what value? 50,000 rupees, because that is the cost for me. Comfortable? So initially all the property, plant and equipment will be recognized at cost. Okay. So the next question is, what is the cost? What is that cost? The cost could be any of these 3. There are 3 pointers which could be classified as a cost. Can we look at them one by one? First, purchase cost. Is purchase cost a cost for me? Yes, if purchase cost is left out, what else remains? Like I purchased a camera for 30,000. What is that 30,000? Purchase cost. Yes. So purchase cost forms part of this particular cost. That's the one. All right. If there is any trade discount, have you heard about this term, trade discount? Trade discount means, okay, one camera I want to buy, the vendor told 30,000 rupees. I told him I need 15 such cameras. For one camera, 30,000 rupees. I told him I want to buy 15 cameras. He told 30,000 rupees. What will I tell him? Crazy fellow. For one camera, you are saying 30,000. I am buying 15. Please give me some what? Discount. Yes or no? Okay, he told, since you are buying 15, no, and you are one crazy folk, I'll give you at 25,000 per camera. Normally, I sell it for what? 30,000. Because you are buying in bulk, I'm going to give you 5,000 discount. That discount, we call it as trade discount. A discount that you get when you purchase or when you sell the goods, no, that we refer to as a trade discount. Now you tell me honestly, how much is going out of my pocket? Camera ka value is 30, but am I paying 30,000 to the vendor here or only 25,000? Me, I'm buying 15 cameras now. How much will I give it to the vendor? 30,000 or 25,000? 25,000. Yes or no? Hence, you'll take 30,000 and you'll reduce 5,000. So your cost becomes how much? 25,000. That's what I've written over here. If there is any trade discount, generally these are not much tested in ACC examination, only for your knowledge sake I've written that. If there is any trade discount that you get, trade discount is nothing but bulk discount that you get when you purchase it. If it is there, reduce it. Comfortable? Yes, so far? If you have any import duty, suppose I am not buying the camera locally, I'm importing it, let's say from Japan. I'll have to pay some customs duty and all. Have you heard about this? Yeah, I have to pay some extra charges. Within the state and all, you'll have GSTs. If you are importing the goods, you'll have customs, etc., etc. So if you are paying any of that, you can add it as well. So that forms part of your cost. This is the first leg of cost. Okay, comfortable? What is it? What is the first leg? What and all forms part of your cost? Is purchase cost a cost? Yes. If there is any trade discount, what are you going to do? Reduce it, because you're not paying that much money. Hence, we will lessen it out. And if there is any import duty given in the problem, then what you will do? Add it up, because you're paying that much money extra. So that becomes part of your cost. Easy. Done. Okay. All right. Second leg of the cost is, just 1 second. Okay, second leg of the cost is directly attributable cost. For our class purpose, we'll call them as DAC. If there is any DAC, you can add it to the cost. Or this DAC also forms part of your cost. What is DAC I'm saying? Directly attributable cost. Maybe once we will read it, then I'll give you a small example. After that, let's revisit this definition and see if you have understood it clearly. Directly attributable costs are those costs incurred to bring the PP to the management intended condition or working condition. Directly attributable costs are those costs incurred to make the property, plant and equipment bring or reach the working condition. Did you understand anything, or can I give you a small example? Understood? Nothing, sir. When have we understood that this we will understand? Correct, no? Okay. No worries. Let's take up a small example for DAC. Okay. Let's say there is a company called Cipla. Have you heard about Cipla? The people who manufactures the into pharma industry, manufactures this what is that? Cough syrups and all, paracetamols, etc., etc. They are basically into pharma industry. Cetaphil they manufacture. Okay, I don't know. I don't use much of tablets. I'm not aware of the things they produce. But either ways, if you're saying Cetaphil, I'll agree with you. No problem. I don't know what is this. Anyway, nonetheless. All right. Now Cipla, no, they have purchased a machinery. They have purchased a plant and machinery. Their intention is they will utilize this plant and machinery to produce a particular tablet which can cure fever. Using this plant and machinery, they want to produce a tablet, a pill which can cure fever. That is their intention. Are we okay? Okay, I'll give you various costs. Again, all you need to tell me is whether these costs which I'll list out now forms part of PP. Can you add that cost to PP, or it cannot be added? That's all you need to tell. Is it okay? All right, we'll list out one by one. First is purchase cost. The Cipla, no, they paid about, let's say, $500,000 to buy this machinery. Can this 500, or maybe I'll give you the value in this column. $500,000 is the purchase cost. You need to tell me whether can you add this cost to PP. All right, property, plant and equipment is what here? A plant and machinery. Cipla has purchased one property, plant and equipment, that is machinery. And on this machinery, they've spent many costs, many amount they have incurred. You just need to tell me whether you can add or not, yes or no. Online also keep responding. If you are lazy to type the full word, YES, you can just type Y also, it's okay. How about here? Yes, sir. All right, popular answer, yes. Done. So since, let's say this particular machinery, it was imported from Japan. This particular machinery, Cipla company has imported from Japan. That means, let's say Cipla office is in Bengaluru. From Japan, it has to come to Bengaluru, means then it has to come via airway route or it has to come via ship. Let's maybe, whatever it is, let's say it came via ship. Cipla had to pay some transport charges of $50,000. To bring that machinery into Cipla factory, Cipla spent about $50,000 as transport charges. Can you add or not? Yes. Okay. All right. The machinery is quite big, sir. It's a huge machinery. So the vendor told, I cannot send the whole machinery in a ship because the space is too much. What I'll do is I'll send in many boxes, small parts. Later you assemble it. I will send you in many small parts. Okay. All right. Since it came in many boxes now, I hired some laborers. Okay. You remember there are some loading charges you must have heard. I hired some laborers to get that box inside my factory. From the shipyard to the, to my inside my factory, I had to pay some loading charges, let's say $5,000. Can I pay or add those loading charges to the cost of plant and machinery? Yes or no? Getting what we're trying to prove, right? Everybody is understanding the example, right? Forget about a right or wrong answer. Okay, they're saying yes. Okay, awesome. All right, sir. So that means all those boxes are inside my factory now. did it come in an assembled format or it came in unassembled? Unassembled. So I hired some technicians, engineers. So I had to pay an assembly charges. Let's say that is $10,000. I hired some engineers who had to assemble that machinery. So for them, they charged me about $10,000. Can I add this $10,000 to the cost of PP? Yes, sir. Okay, fair enough. All right. So once this got assembled, no, we have one nice machinery, huge machinery we have. What was Ciplaka intention of buying the machinery? To produce a tablet which can cure fever. So they started using this machinery. They did produce a tablet. Straight away, you can sell that tablet to the general public, or is there any protocols? We are into pharma industry. Left, right, center, anyone can sell any tablets, or you need to take some permission. You need to take permission, because if there is any problem, then they'll land up in huge trouble. Yes, no? You need to take some permission. Whatever is the authority in India, the health ministry or whatever it is, we need to take permission before we sell the product. So hence what Cipla did is, okay, before we apply for the permission, no, let's do a test. We got the tablet, but let's test whether the tablet is actually curing fever or not. So they did some testings. They put in some chemicals and they were able to produce a tablet. Towards testing charges, let's say they incurred $20,000. Can you add testing charges to the cost of property, plant and equipment? Yes or no? Yes, no, they are saying. Okay, let me give you a little more this. Test ka result was fails. You got a tablet, but unfortunately it is not curing fever. It is not producing the desired result. That means it's a failed testing. And for that they incurred $20,000. Now what is it? Still no, still yes, still what? Yes, no, yes, no. Whatever is your answer, later on I'll write. Yes, sir. Popular answer is yes. Okay, all right, they're saying yes. Awesome. Since this testing failed, they hired new scientists. They changed some chemistry of the tablets, new chemicals. They incurred, this is testing charges 1. They did one more testing. This is testing charges 2. This time they went fancy. They spent $50,000. Okay, this time it is a pass. They did testing. Out of this testing, they were able to produce a tablet which in reality actually cures fever. So now what is this? Can we add this or no? Yes, sir. All right. While all this was happening, no, we have a receptionist in our factory. She was around sipping her tea. She was just observing what natak is going on. For her, it was a nice point. She was just observing. For that receptionist, no, I pay a salary, let's say $1,000. Receptionist salary. Can I add receptionist salary to the cost of my PP? She was just observing. She's not doing anything. No. Right? Okay. Once this particular tablet is reached, okay, you've got the tablet. What does the company do? They'll, after getting the necessary permission, they'll sell the tablet. So to sell the tablet, no, they pay some selling agent they've appointed. For them, they have to pay some commission. And let's say he charges a commission of, if you have to put it in total, let's say it comes to $5,000. Can you add selling agent ka commission to cost of property, plant and equipment? No. Okay. Fair enough. Okay. These are your answers. All right. Now I'll just tell you. To answer such question, again, we have standard. Again, will not dive into each example. You got to know why was again standard necessary? To answer these sort of question. Standard will answer everything in just one line. They've answered to all this question just in one line. What did they say? If it is a DAC, add it. If it is not a DAC, don't add it. That's what they said. Yes. If it is a DAC, add it. If it is not DAC, don't add it. That means what do we need to understand now? What do we mean by this DAC? If all these cost, if it is a DAC, then you can add it. Otherwise, you cannot. That's all. That means if you understand the term DAC, that is directly attributable cost. If you understand that, correct answer you can decode. Can we touch upon that now? All right. So going to the definition, listen to what I'm saying. Sir, directly attributable cost simply means those costs incurred to make the asset to bring to get the asset to usable condition. Directly attributable cost means what? Those costs incurred to make the asset ready. If you are incurring any cost to make the asset ready for use, then it becomes what? DAC. That's all, simply directly attributable cost. Because some assets, though you might have purchased it, you cannot use it straight away. You may have to do some fine tuning. Like in your glory days, 11th standard and all. When you used to buy an asset, or common example, when you buy an asset, will you incur any delivery charges, transportation charges? If you remember, installation charges, delivery charges and all in your 11th standard, they used to ask, what you used to do for that installation charges? Should you have transferred to P&L, or would you have added to the cost of machinery, or would you have added to cost of asset? You always added the delivery charges, installation charges to the cost of the asset. Because that time your teachers didn't use the term, because it is a DAC. Because it is a DAC, you add it to the cost of the asset. Right? Without using the term, you have done it. But now we are doing a little polished approach. Okay. So if it is a DAC, you can add it. If it is not a DAC, you cannot add it. DAC simply means what? Those costs incurred to make the asset ready for use. That's all in layman terms it means. Can we relate that to this particular example? Everyone? Now, Cipla has purchased a plant and machinery. What is their intention of buying plant and machinery, sir? What is their intention of buying this machinery? They should be able to use this machinery so that they can produce a tablet which can cure fever. So, till the stage a machinery is able to produce a tablet which can cure fever, till that stage is reached, any cost if you are incurring on that machinery becomes what? DAC. Because what is the condition which Cipla is expecting, or Cipla management is expecting out of this machinery? It should reach fever curing condition. So that is the stage. Till that stage is reached, whatever cost you incur on this plant and machinery, any related cost on this machinery becomes your DAC. Are you able to relate, or once more? Did you relate it? Yes, sir. No, no. Once more. Move on. Got it, everyone? Can I move forward? All right, great. Now you tell me the right answer now. Looking at this correct answer, I'll just write it away. No need to copy all this. This is just for your explanation. We'll see the questions also. Can you add purchase cost to cost of PP? Purchase cost is not there, means what else is there? Right? So purchase cost, can you add it? Yes. Transportation charges. Now you tell me, sir. Unless you're importing this machinery from Japan, unless you pay transportation charges, will the asset come to your factory? No. Unless asset come to your factory, can you use it and make tablet out of it? Not possible. Is it necessary? Is this transportation cost necessary for asset to reach fever curing condition? Yes. So is it a DAC? Is it a DAC? Keep answering, guys. Yes or no? Yes. So can you add? Yes. All right. How about loading charges? Did the machinery come in full format or bits and pieces? It came in bits and pieces. So unless you incur loading charges, will the asset come into your factory? Forget about using it. Only by paying loading charges, the machinery comes inside your factory. Only after it comes, only you can use. Yes or no? So is it a DAC? Is this loading charges a DAC, directly attributable cost? Yes. So can you add? Yes. Assembly charges. Why did you incur this assembly charges? So that it becomes a full-fledged machinery. Unless you incur assembly charges, can Cipla use the machinery? No. So is it a necessary cost? Yes. So is it a DAC? Yes. So can you add? Yes. All right. Testing charges. You did make some testing. You spent $20,000. Okay. What was the result of this test? It failed. That means, has that fever curing condition reached or yet to reach? At testing one stage, has fever curing stage reached or yet to reach? Yet to reach. Yes. So that means till that stage is reached, all the related cost you can go on adding. Once that stage is reached, you have reached that cutoff zone. Henceforth, you cannot add. So can I add testing charges 1? Can I add testing charges 1? Yes or no, sir? You have to be louder, loud and clear. Or if there's any confusion, I'll repeat once. Confusion? Okay. What did I say? What is DAC? Those costs incurred to make the asset ready. Here, what is the intention of Cipla? They should be able to produce a tablet which can cure fever. That is the stage. Okay. Till that stage, any cost you are incurring on machinery, you can go on adding. Here you have incurred testing charges. Alright. What is the result of this test? Failed. That means, has the asset already reached fever curing stage, or it is yet to come to that stage? It is yet to come to that stage. But are these necessary? Are these necessary? Yes. That means this will also be capitalized. Till that stage is reached, you can go on adding. Once that stage is reached, that is the limit. Beyond that, you cannot capitalize. Comfortable? Okay. Alright, how about testing charges 2 now? Let me see how many of you get this right. Testing charges 2 you incurred. And what was the result of this test? It passed. That means, can I say it has reached the management intended condition? Can I say this asset has reached management intended condition? What is management intention? To produce a tablet which can cure fever. When did that stage get reached? After you incurred testing charges. Before or after? After. That means, is this necessary to get to the stage? Yes. So can you capitalize? Can you capitalize testing charges too? Yes. Now has that stage reached? Yes. Now onwards, if you are incurring any cost on this machinery, can you capitalize? This is the limit. Beyond this, if you are incurring any cost, all that cost, I'm not saying don't account it. You account that cost, but don't add it to PP. Transfer all the cost going forward to P&L. Going forward, all the costs will go off to P&L. Understood? Okay. Now tell me this correctly if you have understood. What about receptionist salary of $1,000? Sir, you tell me, is the receptionist anyway related to machinery? Is she having any contribution towards this machinery? No. The standard uses the term what? DAC. DAC means what? Directly attributable cost. Meaning cost should be related to machinery or related to property, plant and equipment. In my case, it should be related to machinery. Is the receptionist salary a related cost or totally unrelated cost? Unrelated cost. That means, can you capitalize or no? No. That means no means this will go off to P&L account, which we will call it as, we know that we call it as SPL, statement of profit or loss. Comfortable? Okay. You paid a selling agent commission of $5,000. Why did you pay selling agent commission? To sell tablet. When will you sell the tablet? After the stage is reached or before the stage is reached? Only after you are able to produce a tablet which can cure fever, only then you can sell it. Yes or no? That means the stage is already reached. So can you capitalize this cost? Yes or a no? No. That means this cost again will go off to SPL. So with this example, are we able to understand this term DAC? That's how standard gives. They frame 1 or 2 lines or 1 or 2 sentences using which we can decode. Okay. Need a minute or okay? If you want to look at the example once again, no need to write down all this, just listen. This is only for your knowledge. So I can always make you also. Just what, 4 or 5 times if I repeat this, you will mug it up. That is another approach also. But will you understand the meaning of it? No. If you don't understand, so your ACCA is such a subject that few concepts that you learnt in F3, you are learning it again in F7. The same concepts will again carry forward to your next level SBR with advanced problems. There also nobody will teach you because nobody will have time. Because they are advanced version, they have to teach that. See here, if you don't learn all this properly, there also you have to adopt mug up approach. And I feel that accounts is not a subject which should really be mugged up. That's the reason I'm doing it this way. Hope it's not kind of putting you to sleep or anything. Interesting enough? Interesting or not, at least it's not putting you to sleep enough. Okay. Alright. So can I move forward, sir? 2 legs we have covered already. If you have understood, I'll move on. Or let's do a thing. Let's have a quick recap. Because since all these are new, I can understand straight away it may not go in. Because new terminologies. Nobody spoke to us about all this before. But it's high time we know all this. Okay, which standard are we talking about? You need to remember the name, okay? Don't write in examination IAS 23 property plan and equipment. If you know correct name, correct number, mention. Don't get creative there. I will give my own number, I will give my own name. Bad. Not required. Okay, you are expected to remember, so please do remember it. These are required. So IAS 16 talks about what asset? Property, plant and equipment, which we used to refer it as fixed asset. So far we have only covered few concepts. First is the PPE ka definition. Three aspects. PPE means what? It should be a tangible asset. Though it uses the term item, for our understanding purpose, we will call it as tangible asset. Asset means what? It should be within our control, from which we will get all the benefits and restrict others from getting the benefits. So that is the first characteristic, tangible asset. Second one, it should be held for use. Usage is for any of the four uses: production of goods, rendering of service, administrative purpose, rental purpose. And the last third criteria is it should be used for more than 12 months or 1 year. All the three should be satisfied. If all the three is satisfied, a component will become property, plant and equipment. But if you want to show that property, plant and equipment in balance sheet, there are two more recognition criteria. What are those? Future economic benefits. Fair. Because of that asset, the entity should get some benefits. Not necessarily now, even if you're getting in future, good enough. So future economic benefit should be there. And second one, cost of that fixed asset or property, plant and equipment, you should measure it reliably. So basically 5 components should be satisfied for you to show PPE in balance sheet. Then we saw initial recognition. Initially, all the property, plant and equipment will be shown at cost. And for cost purpose, there are 3 elements which we have discussed too. One is what? Purchase cost is part of your cost. If there is any import duty, what are you going to do? Import duty you can add. Trade discount, minus. That is one. And the second aspect which you can add it to or treat it as cost is directly attributable cost, or for class purpose we are referring it to as DAC. DAC simply means what? Those costs incurred to make the asset ready for use, in layman terms. Whatever that may be the cost, only related cost, or left, right, center, any cost you cannot add. It should be directly related to the asset. To make the asset ready for use, if you are incurring any cost, you can add it. That's what we have discussed. Can we get to the third leg of the cost? Everyone okay? All right. Parents, the third leg of the cost is present value of, or 1 minute, hang on, before we get to the third one. I think there's one question. Maybe we'll take off that question. Let's see how well you have understood. Question 1. I gave you an example of Biocon. You have one more question where they've given you various expenses. All you need to tell is whether it can be added to the cost of asset or not. That's all. A Limited or our entity has started construction of a building for its own use on 1st April. They're constructing their own building and the construction started on 1st April 2007 and they've incurred the following cost. They've incurred a land, sir. Can you add a land ka cost? See, if you want to construct a building without land, can you? No. Can you treat it as purchase cost of land? Can you treat it as cost for PP? Yes. How about stamp duty? Stamp duty, no. You have to register land in your name, no. Left, right, center. Now can you say, can you sit in a Arivo Pro ka building and say, to now it's mine only. I'll get all my friends and do whatever I want. Full party I will do. Can you do it? No. In your building, you can do whatever you want. And for you to call it as your building, it should be registered in your name, for which you need to pay some duty or money fees to the government. Not only we refer it to as stamp duty. This is basically registration charges. Can you, without registering it, it does not become yours. So can you add this? Yes. Take your all of you please get your calculators because there will be calculations. Okay. If you've got it, awesome. Otherwise, no, because I just want you to keep calculating. If you have it, keep it ready. Otherwise, it's okay. Please get one. Accounts class, it is required because your F7 is a practical subjects where there will be a lot of calculations involved. All right, keep on adding. Take 3,50,000, add 5,000. How about legal fees? See, if you want to buy any building, no, or a land, first thing you will do is what? check whether the documents are clear or not. Can you verify the documents, or you need expert to verify that? Expert is generally lawyer. He will verify and tell whether the documents are proper or not. Yes or no? He'll obviously not do it free of cost. He's charging $5,000 here. Can you add it? Yes, because unless he says everything is fine, will you buy that land? Unless you buy, can you use it? So is it necessary cost? Yes. So can you add it? Yes. So add 5,000. Next is site preparation and clearance charges. So you purchased a land. On that land, no, there is a rocky patch. The land is like this, Humpty Dumpty. Can you construct building on that Humpty Dumpty land? What do you have to do? You have to bring it to the same level. Yes or no? That leveling charges, we call it as site preparation. Okay. Can you add this cost? Now you tell. Unless you incur it, will the land get leveled? No. Without land getting leveled, can you construct a building? Not possible. So is it necessary cost? Yes. So can you add it? Yes, because this is also your DAC. Material cost. To construct building, at least in India, we require cement, brick and all. Other countries, I don't know. Okay. So is this necessary cost? Yes. So can you add this? Yes, because unless you incur material cost, you cannot construct a building. So becomes a necessary cost. Or 1 minute, hang on. I think there are some adjustments here. So let's put this material cost on hold for the time being. We'll read the adjustments and figure it out. How much they have given, by the way, here? They have given $100,000. Okay, let's keep that. We can add it, but there are some adjustments. So we'll put it temporarily on hold. Labor cost. Can you add labor cost? If you want to construct building, you need laborers. So again, necessary cost. Again, I think there's an adjustment here. So let me write this in bracket. You can add it, but how much is the question? Next is architect's fees. Can you add architect's fees, sir? See, normally if you want to construct a building, you will have an idea in mind, no? How the building should look like, what component should come where and all. Again, for this and all, you will take the help of the expert, and expert here being architect. So is it a necessary cost for you to construct the building? Yes. So can you add? Yes. So that 30,000 you can add. Not a problem. How about general overheads? General cost. In my example, general cost was, just now I gave an example. In my example, general cost was what? Receptionist ka salary. Was it a related cost or was it a general cost? General cost. So can you add general cost to property, plant and equipment? When we say cost, it should be directly attributable. General cost and all cannot be added. So can you add this? No, you need to ignore this. Will you not pass any journal entry for this? You will pass journal entry. Meaning this 50,000 no will not be added to cost of property, plant and equipment. It will be transferred off as an expense to P&L or SPA. That's all. Done. Can we go through the adjustments one by one? Following information also they have given. Material cost were greater than anticipated. On investigation, it was found that material costing 10 million. See here all the numbers are given in thousands. Here they have given in million. 10 million if you have to express in 1000, no, it becomes 10,000. Because 10 million is nothing but these many zeros. Okay, if you have to express in 1000, it becomes automatically 10,000. 1 million is 10 lakhs. If you want Indian context, 1 million is 10 lakhs. So 10 millions becomes 1 crore. 1 crore has 7 zeros. If you have to express that in thousands, cut off 3 zeros. How much remains? 10,000. Is it okay? Alright, so this is 10,000. On investigation, it was found that the material costing 10,000 had been spoiled. Maybe you have not stored the material properly. So due to your negligence, these materials have got spoiled. Therefore wasted, and a further 15 million. 15 million if you have to express in 1000, it will become 15,000. 15 million additionally was incurred on material as a result of faulty design work. So these, standard uses the term as abnormal loss. If you're doing any error, if there's any due to negligence, if there's any extra cost coming in, that standard uses the term as abnormal loss. Abnormal loss should be transferred off to P&L. It should not be capitalized because it's not really necessary. Because of your negligence, this has come in. Hence, the standard is very clear that if there is any abnormal loss, don't add it to the cost of property, plant and equipment. Straight away transfer it off to P&L. Everyone okay? So can you add these two costs to your property, plant and equipment? No. Check the first line, but material costing 10 million, or in fact, what they're trying to say is, what is the total material cost? 1 lakh, right? 1 lakh includes this 10,000 and it includes this 15,000, because your total material cost is how much? 1 lakh. Some material has got spoiled for which you had already purchased. Those cost is 10,000. Due to the design, faulty design work, additional material you have to purchase for 15,000. These two are already included in 1 lakh. Can you include or should you exclude them? You should exclude them. Why? These costs, should not be added to the cost of the asset. It should be transferred off to SPL. But what has our accountant done? Yes, include, because total material cost is 1 lakh. Hence, what do we need to exclude? What do you need to exclude? From 1 lakh, you need to exclude 10,000. From 1 lakh, you need to exclude 15,000. That means, what is the normal material cost? If you do it, I think you're going to get 75,000. Please, 75,000 material cost. We add, not 1 lakh. Any problem, anyone, or any repetition, or got it? No? No issues? Okay. See, basically, any abnormal loss, you cannot add it to the cost of the asset. It will be transferred off to P&L. These two are abnormal loss. Do you agree with me? Right? These are material cost. Total material cost, how much have they given in the question? 1 lakh. Yes? Here. No problem. We only invented 0, but you don't have to be so liberal also. Okay. 1 lakh is the total material cost. In that, 25,000 is already included. Okay. Can we include this 25,000 for our property, plant and equipment? Only normal material cost of 75,000 should be. This 25,000 will be transferred off to P&L. This will be capitalized as property, plant and equipment. That's what I've written over here. That's all. Okay, great. Then they've given something. As a result of the above problems or these problems, work on the building ceased for a fortnight. We had to stop the work for about 15 days from October 2007 onwards. And it is estimated that 9 million means, can I call it as 9,000? Of labor cost relate to this period. You have stopped working due to you did faulty design and your material and all was spoiled, Because of that drama, some work had got stopped. But can you tell the laborers, I will not pay you salary? What will they tell? That is your problem. You hired me, I came, because normally all these guys come from far off places. Whatever you need to pay them. So you had to pay them $9,000. But again, you tell me, is this normal or is this an abnormal component? See, this was not really necessary, right? There's an extra cost coming in. If you had not spoiled your material, if your design work was proper, this extra 9 million of cost you could have kind of avoided. Yes. So this is already included in this 1,50,000. So what we should do? Same like material. What we should do? We need to exclude or we need to reduce it. Same like material. That's all. So that means how much can you capitalize? 1,41,000 cost can be added. This 9,000 material cost, will you not account it? You will account it, but where will this go to? This will go off to P&L account or SPL account. Comfortable? Okay, that's all. This line is not really necessary for the time being. Last one, leave this for now. So do total, sir. How much is it? 350 plus 50. Okay. Anyone has the total for me? 474. Looks less, Noda. 360, 378. 6,20,000. 6,24,000. Anyway, solution is given only. We can check. Yeah, here only it is given. 6,24,000 is the total cost that will be capitalized. How much totally you incurred? 7,08,000. How much can you capitalize? 624. What is the difference? What is the difference between this? So that is what 76, 84. 84,000 is a difference, meaning that cost will go up to. You have incurred 7,08,000, but you can capitalize only 6,24,000, meaning 84,000 cost will go up to statement of profit or loss or P&L. That's got it. Okay, like these, they won't ask you a question. Or I told you in your section B, yesterday's session, if you remember, there will be some calculation. So these sort of adjustments they can give. They can give you these cost and tell how much cost will be capitalized. So you need to calculate that and punch in the numbers. These sort of questions you can expect in section B. Or in section C, this could be one of the adjustments. Rare, because normally they ask something different in section C, but possible that they may ask. That's how it gets asked. Don't worry how it gets asked in the examination. As I told you, after we cover all the concepts, we will be taking some examination questions. Thereby you'll understand how these adjustments gets asked in the exam. Our intention now is only to learn the concepts properly. Once you know the concepts properly, they can test it any which way. You will still be comfortable. Okay, first question from my side, it is over. Okay, somebody is saying, so what if it is normal loss? So normal loss, you can add it up. Because normal loss are unavoidable. No matter what you do, they are unavoidable. Like, to give you an example. Let's say you're constructing a building in a hilly area. In Leh Ladakh, you're constructing a building. In somewhere in March and all, you'll have heavy snowfall. Can you construct the building can you construct your building in that month? Not possible, because that is normal. No matter what you do, can you avoid that snowfall and still go ahead with the construction? Not possible. So those are your normal components that can be added. Only abnormal loss will go off to P&L. Normal things can be added. Have I answered your question, buddy? Abnormal loss needs to be reduced, right? Yes, it needs to be reduced. That's what I've done over here. I have reduced. Check the screen. I have reduced abnormal material cost, abnormal labor cost. Both I have reduced. Done. No issues. Okay, so this concept is done. Let's come back to our chart. So we had 3 legs for our cost. 2 we have already covered. Let's come to the third leg of the things. Hope it's okay. Some more time I can go on. Then I can give you a break. Maybe on another 20 minutes. I can move on now. It's there, no? All of you are in the good zone only. Not reached the Buddha zone. Not yet. Slowly we're getting there. Okay. The third leg is what? Present value of dismantling cost, or some Indian books call this as DSR cost. Decommissioning and site restoration cost. I don't know whether you've heard it. Nonetheless, it's fine. So this also can be added up. DSR. So can I give you a small example to understand this? Okay. Just mention here. Maybe orally I'll try to explain it. Let's. It's okay. Maybe better. Sir, some of you are still in college or passed out? All of you passed out, huh? Oh, nice. Which college? Bangalore only. Somewhere else, which of Christ? Huh? Christ Academy. Okay, no problem. Let's take that example. What's your name, sir? Rohit. Rohit. R-U-H-I-T-H. Okay. Alright. Rohit is saying he's a guy who has passed out, or he's a passed out guy from Christ College in Bengaluru or wherever it is. So let's take maybe example related to that. Let's say most of us anyway use mobile connection, Reliance Jio Dandanathan. That seems to be our hot favorite. Yes. Okay. Jio, no, they approached Christ College or Christ Management. They told, boss, there are many people, many students in your campus. Obviously, they use phone. No matter how much ever your times you tell don't use phone, they will still use it only. We can't help it. Okay. So since you require signal, no, normally if you want to get the cell phone signal, tower catches it. Yes. So Jio told, I would like to install telecom tower on your campus building. One telecom tower, I would like to put it on your campus building so that you will get good network. Okay. So that everyone will be happy. What do you think Christ College will tell? Why should I give permission for you? What's in it for me? Christ told, okay, fine. I know that you will expect something out of me. I will give you $100,000 every year as rent. If you give me permission to install this telecom tower on your building, on your terrace. I'll not use your normal premises. I'll install this telecom tower on your terrace. Terrace me anyway, you don't construct classes. So let me install that telecom tower. And I will pay you $100,000 as rent every year. Christ College people told, management told, yeah, this seems to be a good deal. Okay. All right, they went ahead. But Christ College people, no, they asked one question. How long will you do this for? Jio told my telecom tower ka life is actually 5 years. This telecom tower lasts for 5 years. Christ people told, okay, what after 5 years? Jio people told, I'll take off the telecom tower. I'll airlift it. Then Christ people asked, will there be any damage caused to my building? Because if you remember telecom tower and all, will they just keep it like this or will they fix it to the ground? Have you seen any telecom towers? Yes, they're not just kept like that because they have to withstand the rain, wind and all that. No? They're really, you properly put in nut to bolt and all, you will fix it and make sure that it really stands grounded. Yes. So if you are really making sure that you are doing so much of fittings, when you remove it, there will be some damage caused to the building. So Christ people told, what about damage charges? Jio told, no problem. There will be some damages. Approximately, I think it will cost about $10,000. I will pay it. I will repair it. If there is any damages, I will incur it. But when will this damage come? This $10,000, will it come in the year 1 or will it come at the end of the useful life of property, plant and equipment? Here, property, plant and equipment is telecom tower, okay? The PP is telecom tower. How long, how many years does it last for? 5 years. So when will this 10,000 repair cost come? At the end of the useful life, which in my example is year 5. Comfortable everyone? Okay? Or at the beginning of 6th year also, whatever, it's okay. Now the question to you is, should Reliance Jio, which is the property, plant and equipment we are referring here, telecom tower, should we add this $10,000 repair cost to the cost of telecom tower? Should this repair cost be capitalized? Meaning it should be added to the cost of telecom tower, or should Reliance Jio transfer this cost to P&L? Did you understand the question? What do you think it is? I'll get me here your thoughts and then maybe tell you the answer. What do you think? Not getting, huh? No problem. Somebody saying add. Okay. This repairs, no, we call it as dismantling cost. Dismantling or decommissioning cost. Do you understand it? After some, there will be few assets where after its end of its useful life, no, there will be certain repair cost. There will be some restoration cost you may have to incur. That restoration cost we call it as dismantling cost or DSR cost. Yes. Do you get the meaning? Alright, what the standard says or IAS 16 says is, even the dismantling cost can be capitalized. Can be named, it should be capitalized. So this cost, repair cost of $10,000, it will not go to P&L, but it will be added to the cost of telecom tower. Why? Sir, you think, isn't it in a way like DAC only? Now you think, unless Reliance Jio incurs this repairs, can they install telecom tower in Christka campus? Unless Reliance Jio, the management, that company, they take care of this 10,000 repair cost, unless they incur this, will Christ give permission to install telecom tower? No, because of this telecom tower only that expense is coming. No, Christ people will tell you take care of it. That is not my headache. Yes or no? That means if you don't incur this expense, can telecom tower be installed in Christ College? No. So if you want to utilize or if you want to use this property, plant and equipment, this cost is a must. Unless you incur this cost, you cannot start utilizing or you cannot install telecom tower. Yes or no? Are they not related? Yes. That means in a way they are also what? DAC only, directly attributable only. Do you guys understand that? That means why did we not call it as DAC? Why did they bring in separate section? The thing is, when does the DAC get incurred? If you install telecom tower in year 1, when will the year 1 beginning, when will the DAC cost come in? Year 1 beginning only. Like if you want to, like what are the DAC example? Installation charges, delivery charges, architect fees, etc. etc. These are the examples of DAC, no? When will you incur that DAC? After 4 years, 5 years, 10 years or immediately? Immediately. But check, are you incurring this repair cost immediately or is it coming at the end of year 5? It's coming at the end of year. Hence, they brought a separate section for this. That's the reason we don't generally include this in DAC, but they brought it as a separate section. But these are also necessary, hence these are also capitalized. Any doubt? How much to capitalize, I'll tell you, but clear on the conceptual side of things. Why it should be? The answer is simple. Dismantling cost should be added because they are necessary for the asset to function. Okay, clear they're saying even now. No problem there also. Okay, but one problem is there in DSR cost or dismantling cost. What is that? Problem is, are you incurring this $10,000 immediately? Are you incurring this in year 1 or is it coming in year 5? This $10,000 repair cost coming in year 1 or year 5? It's coming in year 5. Means you tell me, is when are you accounting telecom tower? When are you showing this PP? You have to show it in year 1 only. Yes, no. The moment you install the telecom tower, you should show it as PP in your balance sheet. Yes or no? Correct? Okay. So this $10,000, is it present value or is it future value? This $10,000, 10,000 is the value at the end for year 1 or is the value of for year 5? Year 5. So is this $10,000 the present value or is it future value? Future value. Is having $10,000 now and having $10,000 at the end of year 5 same or completely different? If I tell you, I'll give you $10,000 today, option 1. And I'll tell you, or I will give you $10,000 at the end of year 5. Which one will you choose for? Are they both same or completely different? Completely different. Yes or no? Because now with $10,000, you may buy, let's say, one camera. After 5 years, are you sure you'll be able to purchase this camera? No, because due to inflation, its cost might have increased. Yes or no? Possible. Correct. So that means this $10,000, it's not the current value. It is what value? Future value. But when are you accounting this telecom tower? After 5 years or now? You are accounting now. That means you need to find something known as the present value or today's value. Because this $10,000 is not today's value. It's the value after 5 years. That today's value only we call it as present value. Find out the present value. There is a certain formula for it. Let's say that comes to, let's say, $8,000 assumption. I'll tell you in the problem how it works. Don't worry, this we'll utilize in many standards. Present value I'm assuming to be how much? 8,000. Now you tell me, how much will you capitalize? Will you capitalize 8,000 or will you capitalize 10,000? You'll only capitalize 8,000 because you are capitalizing or you're showing telecom tower now, no? So means your repair cost ka now value only you need. What is the present value or today's value of that repair cost? 8,000. So that means this 8,000 will be capitalized. But how much repair cost are you incurring actually? 10,000. Is there any difference between these two? Is there any difference between 8,000 and 10,000? Yes. How much is the difference? The difference is 2,000. That is your time value of money ka interest factor. That 2,000 will be transferred off to SP. Because $8,000 if you have today, if you deposit in a bank, all right, after 5 years, its value will become how much? 10,000. How 8,000 became 10,000? 8,000 if you deposit, if you make a fixed deposit today, after 5 years, its value, that fixed deposit value will become how much we say? 10,000. How it became 10,000? Because bank will give you interest of 2,000 for that 5 years. Yes or no? So hence that interest component should go off to P&L. Only 8,000 you capitalize. Difference is nothing but the interest component which will go off to SP. That's your accounting. Did you understand? There's one more example or one more question. We will take it up. But did you overall wise, did everyone get that point of view? Any confusion? Need a minute? Or okay? Okay. That means what is the fund of dismantling cost? Only two components. Dismantling cost, first of all, can you capitalize? Can you capitalize dismantling cost? Yes. Full value or present value? Present value. Hence check in the chart what have I written. Only the present value of dismantling cost forms part of your cost. Okay, the difference between present value and future value is your interest component which goes off to SP. So these three are your components of cost. Now Okay, you're saying you got it. Let's do a thing. Let's take up okay, maybe one more thing, and I'll just cover this only. So far we saw what forms part of your cost. There is also something known as cost exclusions. We already did a problem you know of. One gets excluded from cost. What is that? Abnormal loss. Another one, receptionist salary. What is that receptionist salary? We call it as administrative expense. What about salesman's commission? Did we include it? No, that is nothing but your selling and distribution cost. These are your cost exclusions, meaning this cannot be capitalized. It will go off to the end. These are your cost exclusions. Manageable. Okay. There are many, but I think for our understanding, I think these three are good enough. So we saw the definition, we saw what is cost, we saw what is not a cost. So far, that's all we have learned. I think we'll go quickly and just apply in a couple of questions. I think we'll take up this. Okay. Question number 2 we'll take up. If an oil rig was built in the sea. Okay, maybe just a little background I'll give you. See, normally you extract oil and all from the ocean floor, if you remember, right? Companies, right? Okay. Excuse me. Like natural resources, minerals and all. I mean, if you want to extract certain crude oils and things, no? Normally you extract it from the ocean. Now, let's say Reliance company. They are into natural gas production, right? So they want to extract oil from the Indian Ocean. Can you and I also do that? If Reliance can do it, you also decided, I will also go deep dive and get some oil. Can you do it? That means you need to take some permission, because it's a natural resources of a particular country. You need to take permission. Yes or no? So you need to approach the Ministry of India, whichever the ministry it comes under. You need to take permission from them. Boss, I'm extracting oil from so and so location. Give me permission. And they'll give you permission, maybe for 3 years, 10 years, 15 years, 100 years or whatever. All right. Now you tell me, if you want to extract oil from that ocean, all right, will the ocean coral leaves, ocean bed, will they remain intact, or will there be some damage caused to that? There will be some damage to the sea life. Yes or no? There will be, obviously, because when you're constructing something in the ocean, right, few things will get damaged. Let's say Government of India gave permission to Reliance for 5 years. They told Reliance you can construct or you can extract oil for a period of 5 years. But what will government tell Reliance? At the end of 5th year, restore the seabed. Whatever damages you have done, repair it. Yes or no? Whatever damage you have caused to the marine life, no, restore it. Comfortable? That is what? No. That is nothing but dismantling cost. So this question is based on that. In my example, I took up telecom tower. Here they are using oil rig. That's all. Same dismantling cost ka example it is. Did you get the background? Is it relatable? So dismantling cost, can you capitalize? Yes. Will you capitalize full value, or you need to find present value? Present value. So finding out present value is the crux of this question. Can we go ahead and look at this? Okay. If an oil rig was built in the sea, the cost to be capitalized include cost of constructing the asset. And the present, I think this is an example which I converted into question. Okay, leave that first 2 lines. Let's go ahead with this. If an asset cost $10 million, meaning to construct that oil rig as in oil well. To construct that oil well, how much does it cost? $10 million. So here, which is the property, plant and equipment? Here the property, plant and equipment is that oil rig or oil well. That is property, plant and equipment. To construct it, it takes about $10 million. Okay, fair enough. To construct. And it would cost $4 million to remove it in 3 years. So this is a removal cost. This removal cost only we call it as what? We call it as dismantling cost. Because to dismantle, English definition means what? To take it off, to remove it. Yes or no? So this removal cost of $4 million only we refer it to as, or standard calls it as, dismantling cost. Can you capitalize dismantling cost? Yes. But can you capitalize $4 million? No. Why? Because will you incur this $4 million today or in future? Future. And what is the future here? Future here is 3 years. this. You will incur that $4 million at the end of year 3. But you want to account this property, plant and equipment, oil rig now. So this $4 million is not the present value, but it is the future value. We need to find out the present value of it. That's all. If you find out the present value, you can capitalize. That's all is the funda of this. The present value of discounting cost should be capitalized. It must be calculated. That's what they've given as concept. The interest rate is how much they've given? The interest rate is 10%. To find out present value, we need something known as the discount factor. Is FM covered for everyone? This is the first subject. No problem. All right. So interest rate is how much? 10%. Calculate the present value of dismantling cost to be capitalized. Okay. There's a small formula. It's also given over here. To find out present value, normally we calculate an FM like this. So to give you a little context, I'll present it like that only. Have you done your net present value in your BCom and all? NPV calculation, profitability index. Have you heard about this? That format I'm putting it over here. If you have done, if you have not done also, no problem. Or if you have forgotten also, not a problem. Year cash flows, discount factor. Discount factor is nothing but the interest rate. What is the interest rate given in the problem, sir? 10%. And then you get something known as discounted cash flows, or you can call that as present value of cash flows. This is column number 1, column number 2, column number 3. To get the present value of cash flow, we simply take the cash flow, which is represented in column number 2, multiply it by the discount factor. Cash flow multiplied by the discount factor gives you present value of cash flow. You remember NPV used to do like this only. Yes. So when are you incurring that dismantling cost? Year 1, year 2 or year 3? Year 3. Okay. So I'll call it as 1, 2 and 3. First year, are you incurring any dismantling cost? Second year, no. You are incurring dismantling cost here only one time you are, only one time you are incurring, and that you are incurring at the end of year 3. How much you are incurring at the end of year 3? $4 million. Okay. 1 million is 4 lakhs. So can I call it as 40 lakhs like this? That's your 4 million. Represented in full value. Yes. Okay. How do you get discount factor? If you remember, there was a small formula. Discount factor is given by 1 divided by 1 plus. You can call it as I or you can call it as R. Both are okay. Some books uses I. Some book uses R. I is nothing but interest rate. R is also interest rate only. This is nothing but 1 divided by 1 plus R whole power n. So first year ka discount factor. To get it, what do you do? 1 divided by 1 plus R. What is R here, sir? 10%. 10% if you have to express in full number, it becomes 0.1. Yes. N is for number of years. You are in which year now? First year. So whole power 1. So in your calculator, you need to do 1 divided by 1.1. First 10% though, you can literally mug it up. It comes in a lot of problem. 0.9090, then 0.8264, 0.7513, 0.6804 like this. 10% you can literally mug it up because in many problems, discount factor is mostly 10%. Some of you are wondering how to calculate. 1 minute, I can show you. You do 1 divided by 1.1. Okay, you're going to get 0.9090. Again, press equals to button. On this calculator, maybe it does not work. 1 divided by 1.1. Keep on pressing equals to button. What are you getting? 0.8264. Again, if you press equals to button, you're going to get 0.7513. Especially in these calculators, it does not work. Many calculators, it does work. Okay. Just press equals to button. Or for second year, if you want to actually calculate, it is like this. 1 divided by 1 plus 0.1 whole power 2 because here for second. So you have to basically divide 1.1 again. So just instead of doing that, if you press equals to button, you will get it. Anyone has any confusion in calculating that discount factor, or all of you are okay? Here, everyone is okay. No problem. Online folks, anyone has an issue? If you have it, I can explain, or if you are through, if you are okay, I'll move on. Okay, fair enough. So how do you get present value? Just multiplication. These are not there because cash flow is coming only at the end of year 3. Multiply 40 lakh multiplied by 0.7513 you do. How much you going to get? 30, little louder, sir. 3005 200. So this is the number. This is the present value, 3005 200. Comfortable? This 40 lakh is the future value. This 30 lakh 5200 is the present value. Okay, what it simply means is, take your calculator, all of you. Punch in this number, 30 lakh 5200 plus 10% you do, plus 10%. 3005 200 plus 10 percentage you do once. Again plus 10% you do twice. You're getting 36 to 92 plus 10% you do again. What are you getting? 39 lakh 99 921. Yes, that is rounded off to 40 lakh over here. What it simply means is, if you have 30 lakh 5200 with you today, if you invest that money in a bank, and if bank gives you 10% interest rate, at the end of year 3, this 30 lakh 5200 will become 40 lakh. That's all it is. This is what simply we are trying to calculate. That's what we simply say. Take cash flow, multiply by discount factor, you're going to get present value. That's the logical way. Comfortable? Okay. Is there any difference? Oh, first of all, let me ask you one question over here. What will you capitalize? First of all, dismantling cost, can you capitalize? Yes. Which dismantling cost will you capitalize? 40 lakh or 30 lakh 5200? You will capitalize 30 lakh 5200, which is your present value. Okay. Comfortable, everyone? That means what will be your cost of PPE? Can you invent it? That oil rig, PPE here is oil rig. You bought that or you constructed that oil rig for $10 million. Okay, I'll maybe present everything in millions. 10 million. That's all, or can you add dismantling cost also? You can add a dismantling cost also. How much dismantling cost you will add? 30. Can I call it as 3.005 million? This much you can add it to the cost of PP. So your cost of PP will become 13.00. That's all they are asking. This is your total cost of property, plant and equipment. Okay, is there any difference between these two? Is there any difference between 40 lakh and 30 lakh 5200? Yes. How much difference is there? 9 lakh 94 800. That's a number. What will happen to this 994 800? The difference between 40 lakh and 30 lakh 5200. What is this? This is time value money ka interest component, which will go off to P&L. How it calculate or how much of it will go to P&L? No, I've presented it here. For the time being, let's not worry about this one for the now. This is more relevant when I come to leases topic. For financial instruments, there is one topic. Okay, that time I will tell you the journal entry. It's the same journals. Okay, about this. For now, don't worry about this. Okay, I think it becomes little advanced. For now, let's put that on hold. Okay, so this is the thing. That's all they ask in the question. How much cost will you capitalize? Which we have got it. Everything is good? All right. So I think you're expecting that thing. What is that thing? Breaker. Just 1 minute. I'll quickly see if anything related question is there. I'll quickly cover it off. Okay. All right. Let's do a thing. Let's take a break for about 20 minutes. Come back and do the remaining concepts. Thank you.